everyone, this is Baeza, and today we're going to talk to you guys about term loans and lines of credit. Now, you guys have heard me over the last several years in talking about term loans and lines of credit. Well, I want to go ahead and tell you a little bit more about why it's even more important for today that you get access to capital using term loans and lines of credit. Now, for those of you guys that don't know me, my name is Baeza. I've been funding businesses for over 10 years now. I have a company that's been out there for over 15 years, and we've helped raise millions of dollars, and we definitely funded over $1 billion worth of deals in our lifetime. Now, today I want to talk to you guys about a particular program that we have called Term Loans and Lines of Credit, in which it allows you to get access to capital using either your personal credit or using your income, or it could also be a combination of both. We're going to start with term loans. Term loans is a way for you to get access to cash, in which you can get up to close to $1 million really, but the average really is about maybe $350,000 to $500,000 in cash. Now, this money is given to you in a form of a direct deposit. It could be a check, an ACH transfer from the lending institution, and the lending institutions will vary from credit unions, community banks. It could also be big lenders such as American Express, Citibank, Chase, you name it. The source of where it's coming from only matters to the amount of money that they make available for a person like yourself. And for somebody that is looking to start a business, maybe you already have a business, sometimes they make it a lot more difficult for you to get access to money because it will vary based on collateral. They will ask for how much your business is generating in revenues per month or even per year. What's your business plan? What are you looking to use the money for? Well, term loans don't really have those criteria. They actually just go based off of your income, and they also go based off of your credit, your personal credit. Now, you may think to yourself that maybe perhaps you do not want to put your name in the business loan and you just want to go strictly with business. You can definitely do that. Those options are out there. The only problem is that banks only want to give you the money when you don't need it. And that's the problem, that you're obviously looking for funding because you have different needs that need to be met at this moment, not later on, not down the line. For that reason, it is important for you to leverage what you do have, your credit and your income. Credit and income are super important because it allows you to get access to the funds with no collateral, with no prepayment penalties, and there's absolutely no limitations as to what you can use the money for. We have clients that are using it for e-commerce stores such as Amazon stores. We have people that are using it to start new businesses such as restaurants, cannabis companies. We also have people that are buying hay, people that are buying equipment for their farm, things that normally banks would not lend on or would make it super difficult to lend on. There's no limitations to what you can use the money for. There's nobody looking over your shoulder trying to figure out what are you using the money for. Once that money hits your account, it's completely up to you. And for us, our job is to make sure that you're responsible so that you actually are using it in a very responsible way where you're not hurting yourself. We want to make sure that we set you up for success. So having said that, you go through the process, you get the money directly to your bank account, you do your thing, right? You go through your business as usual, you purchase the business, you grow your business, and what you do next is simply either pay off the loan soon. You can actually pay it off a lot early and there's no prepayment penalties, or you can just simply replenish the income, the profit that you've actually gained. You can go back and simply use that money again, and then you already have the loan out there, so it's not like you have to pay it off. Usually it's 3 years, 5 years, or 7 years that you have in order to pay it off. So there is no rush on you having to pay it off if you don't want to. You can simply recycle the funds, recycle the profit, and then just keep doing the same thing over and over again. That's the beautiful thing about term loans, that it is absolutely very, very much less hands-off from the lender side, and you just simply get to do what you want to do with that money. Now, the lines of credit, it is a little bit different, but very similar concept. There's no collateral needed. That one does not require any income. It's just based on stated income instead of verified income. And you do have to have pretty good credit because it is just based on your credit alone. Now, most of the clients that we work with, they'll typically qualify for a 0% line of credit for the first 6 months to 13 months. You can certainly use that within the first 6 months to 13 months. You can use that however you like. And that's the great thing about this, is that it is simply use it as you go. If you need $10,000 and you have $50,000 available, you can use those $10,000. If you only need $5,000, you can use it $5,000. The average is around 1% of whatever you use that the monthly payment will be based off of. It is not always the case, but if you needed to get an idea as to what your monthly payment's going to be, usually I would recommend basing it off of a percentage. So if you're using it for $10,000, you can expect maybe $100 to $300 a month in order for you to make your monthly payments. Now, I trust that you know what you're doing with that money and that you won't be making those monthly payments for the whole term. Hopefully you can make those monthly payments within the first couple of months and then you can pay it off soon, because remember, once that 6 months to 12 months expires, the interest rates go back to their normal rate, which can sometimes be in the high 15%, 20% or so. Regular rates that go based off of lines of credit, which are typically a little bit higher than the normal loans, right? So because of that, you simply have to go ahead and qualify based off of your credit. You use it. You can always go ahead and use starter checks to liquidate those accounts and simply have cash in your bank account. That requires sometimes a little bit of an extra fee, but each lender is different. Our job is to make sure that we make it as easy as possible for you. So once you've gone through the process of obtaining the line of credit, you can always go ahead and reach us or reach whoever's helping you so that they can give you access to starter checks. And then keep in mind that when it comes to the credit cards or even lines of credit, you want to be careful when you're first getting them, because keep in mind that it is a brand new account and therefore you don't want to have any red flags at first. We always recommend that you use them at least once or twice for a small purchase, such as a Starbucks, like gas station or something like that. Just because if you use it with a high volume, like say you put in a $5,000 transaction or even a $15,000, sometimes it can flag the account and it will cause it for you to get shut down right away. So you want to be very careful. Once your foot is in the door, make sure that you build that relationship with the bank, because the bank will open even more doors and they will make it a lot easier for you in the future to get even more money. You can do some credit increases where you no longer have to go through the application process. All you have to do is just let them know that you need more and they'll give you more without doing a hard pull. A lot of these offers, they don't require hard pull on all three bureaus. Sometimes they'll only do a one bureau hard pull, but the pull itself for the inquiry, they will show up because they need to have an idea of what your credit looks like. So they will initially do a hard pull. That's just something that you won't be able to avoid, but you can certainly control. So that's the one thing that we control. We control the inquiries. We control where they're pulling from, what lenders are pulling what. And so that way we can make sure that your score stays as high as possible, especially in this economy where credit matters more than any other time that we've dealt with lenders in the past. So you want to be super careful. And last but not least, when you're using this money, keep in mind that even though there's very little risk for you because you are using the bank's money, always keep in mind that you have to still have some sort of a business plan. You want to have an exit strategy. You want to know exactly where the money is going and how are you going to turn $10,000 to $50,000. How are you going to turn $100,000 into $1 million and so forth. So if you want more information about how to get started with our funding programs, definitely go ahead and click on the link or simply reach us at our website at www.efundingexperts.com and we'll be happy to help you. Either myself or one of our consultants will be able to go over your details, your questions, anything that has to do specifically with your business. We are delighted to helping you out. Again, this is Jose Baeza. Thank you so much, you guys. I'll talk to you guys soon.